Thanks very much, Tim, and it's a pleasure to be on the Share Cafe this afternoon. Thanks for having me. My name's Gary Rohloff. I'm the co-founder alongside my wife and our two sons of Laybuy. We remain 30% shareholders in the business, so we have the largest shareholding in the company. And we are regarded as one of the leading buy now, pay later providers in New Zealand, where we were founded. Our focus is on the UK market. We see a huge opportunity there. We relocated to the UK personally back in 2018 to start the business up there, and based back in New Zealand on account of COVID. We came back here for summer and we're still here in 2020, that was. The strategic partnerships and UK merchants that we have are fueling the rapid growth, and you can see that here with a 500% plus GMV growth year on year in the UK, and a 160% on prior year overall for the company. So our growth has been massive in the UK and continues to be very, very solid in Australia and New Zealand, where we are present also. You can see our merchants are now over 9,000 active merchants on the platform, which is a 75% growth. And our active customers are now through 750,000. Interestingly, our customers use debit cards. 85% of our transactions on our platform are using a debit card. So just interesting when listening to our friends from Split It and just the difference in the models. Our model is the most capitally efficient in the market. We turn our capital somewhere around 24 times a year because we're a weekly payment cycle provider, and our funding lines that we have in place, we're fully drawn, would enable us to achieve a 4 billion annualized New Zealand dollar GMV. We have a proven and highly scalable and flexible platform, and we are very well positioned for the regulatory environment that we see unfolding, particularly in the UK and possibly through other sectors, other territories as well. If we just go on to the next slide, please. We differentiate in some fairly obvious ways and some that are somewhat subtle. We are the weekly payment provider in New Zealand, Australia, and the UK. We obviously, like most in this sector, we never charge interest ever. We were the first to market with a product called Laybuy Boost, which allows our customers to spend more than their Laybuy limit in one seamless transaction. They don't have to use anything other than their Laybuy account. And we're currency agnostic, which means all our customers can shop anywhere in the world where those retailers that offer Laybuy ship into that customer's country. So as we scale and have customers around the world and retailers increasingly ship around the world, our customers become available to those retailers from the time they sign on. We're available online and in store, and I'll talk a little bit later about our in-store offering through our collaboration with MasterCard. We do run credit checks. We are integrated with Experian globally. We've done that since the day we started, and that positions us very well in terms of the responsible lending and affordability checking that has been raised recently in the regulatory discussions in the UK. Can we go to the next slide, please? I won't dwell on this one. The model is very familiar to everyone on this call, I suspect. So we go to the next slide. We are, in our view, very well positioned for the inevitable regulation that will come as a result of the Woolard Review in the UK. We credit and affordability check all our customers. We never charge interest. Our credit limits are a function of the credit and affordability score we get. Our late fees are capped, and only 97% of our customers ever pay a late fee. We are championing a development of an industry-wide code of practice that will see these protections for consumers embedded in what the industry does. We only ever send debts to a debt collection agency after it has been outstanding for 45 days. We pay all the agency fees, therefore ensuring that consumers are not adversely impacted in the event they cannot pay. The original debt was all they ever owe us. Go on to the next slide, please. Our strategy is pretty simple, really. We have an increase in our market share in our already established markets. That is key to us. And we continue to do that, as we recorded in our Q3 update to the market, our year-on-year growth in New Zealand, which is our oldest market, if you like, was 65%, and that continues to be consistent with what we are seeing in subsequent months. Our key focus, though, strategically is accelerating the growth in the UK market. We have built our platform for global scalability. We have a significant opportunity in the UK where we've carved out a very credible position in that market. When we arrived up there, actually no one was doing what we were doing in 2018. We are targeting the SME merchants, and we have a lot of lighthouse brands that were our focus early on in our growth in the UK. We now see that the benefit for us and our shareholders is around the breadth play, bringing on a larger number of smaller corporates and enterprises that inevitably pay us a better commission. Our beta test, we will continue into Q2 of this financial year in the US, supporting our New Zealand and UK merchants who want to access that US market and want us to assist them. But the US does remain a long-term growth opportunity for the company. I'd reiterate our growth strategy and our focus is all around acceleration of the existing position we have in the UK right now. The new platform enhancements are all around simplicity. We have built our product on being simple for our consumers to use and simple for our retailers to adopt. We have a collaboration with MasterCard that I will talk to further in a couple of slides, and that collaboration will enable us to create an even simpler solution for our customers and for our retailers. If we could just go on to the next slide, please. This UK market opportunity shouldn't be underestimated. The retail market itself is nearly £400 billion, and the e-commerce market within that nearly £100 billion. We have carved ourselves out a significant position in that market, regularly quoted alongside two of the better known competitors that we have out there. And we have some key exclusive partnerships with major sporting clubs that give us access to a number of fans that would otherwise not be able to avail ourselves of. If we go to the next slide, you'll see what I'm talking about here. We are the official and exclusive buy now, pay later providers for Manchester United, Manchester City football clubs. We provide our service to Arsenal Football Club. Those three clubs alone give us access to 27 million fan followers in the UK. So we are working very closely with these clubs. COVID obviously has proved challenging with enabling the in-stadia facilities that we have, but we most certainly are working with them to access that fan base and make Laybuy available to their fans for merchandise purchasing, etc. If we go to the next slide, before we leave that slide, actually, if we just go back, our pipeline that we will announce as we go into our September announcement for our Appendix 4C is looking incredibly strong. I've got some great retailers and brands that we'll be able to talk to, and I'm really looking forward to making that public towards the latter end of this month. Let's go on to the next slide. Thank you. This digital card that we have in collaboration with MasterCard is going to change the way we offer our product to consumers. We offer Laybuy in store. It is a contactless transaction for the consumer. We have no integration whatsoever for the retailer. We simply ride the MasterCard rails. So for the retailer, this is a very, very simple solution to offer to their consumers. We have this live in New Zealand and Australia today. We will be launching this in the UK. It's enabled, but given the lockdown that they're experiencing, we chose not to enable that up there until we're ready to go. If we just go on to the next slide, please. These slides speak to themselves, all graphs going to the right and up. Next slide, please. And our income also going up to the right and up, and our net transaction margin now showing stability after we have been working very hard to ensure we get a more stable, more repeatable net transaction margin as we open the funnel and take on board more consumers. So if we go to the next slide, please. So this slide I spend just a little minute on before questions. I think the numbers that I'd really like you to focus on is the 500% plus growth in the UK, the 65% growth across ANZ, New Zealand being the dominant player there, and the overall GMV increase year on year on just shy of 160%. Our active customers are up nearly 90%, our active merchants up 75%. Revenue up between 134 and 141%. We haven't announced that to market yet. And our net transaction margin will come in somewhere between 10.2 and 10.7 million. So the company is growing very, very rapidly. We are ahead of what the investor or the analyst community had anticipated we would be for 31 March 2021. And I'm very confident that as we go into 2022 financial year with what we have in our pipeline, that we will continue to see very, very solid growth in this company. I think that's my second to last slide. It is. Thank you very much, Tim. I hope I'm pretty much on time from what I've been timing in front of me.
Bang on time, Gary. Thank you. We always appreciate that. For new share or new investors, you didn't spend a lot of time on the actual business model as to how you got paid. Can you give us a little bit more colour on that, please?
Yeah, sure. It's we get paid by the merchant. We effectively buy the product at a discount and sell the product to the consumer at full price.
And it almost looks like you bypassed Australia, your Pacific brother here, and you went straight to the UK. What was the appeal about the UK market, and what's that like as a regulatory environment?
Yeah, sure. So we proved the portability of our platform by going into Australia in June 2018 to support our New Zealand merchants who had a presence or shipped there in the main. But we realised very quickly that the Australian market's a red sea of competition. We would spend a lot of time, money and effort trying to take share off some very big players. We saw the UK as a market that was white space. It's Westminster law, so it was very easy for us to take our platform up there and get it underway. And as I mentioned, in 2018, August, when we arrived there, no one was doing what we were doing in the market. Klarna had a presence there with a very different product to ours. And so we had a bit of heavy lifting to do, actually, in terms of educating the market. But we have now carved ourselves out a very solid position up there, and we're just looking to expand on that. The regulatory regime is evolving, but I would suggest that we are very well positioned for that, given the responsible lending stance we've taken since day one, and we actually welcome what is being suggested.
And what's the sales process? Do you align yourself with a brand like the EPL? It's $1 billion market we see. What is that sales process in terms of aligning yourself?
Yeah, look, we started up there and set out to gain some lighthouse brands that would give us and our brand credibility and traction. And JD Sports, WH Smith, Wilco, Boohoo, Foot Asylum, the Hut Group are all lighthouse brands in the UK and gave us the credibility and traction we're looking for to then go into the breadth play where, and in the normal distribution curve, that breadth play is where the money is and where the profitability is for any business. We went down the route with the football clubs because we saw an opportunity there to not only be a part of what is a very real and loved infrastructure in the UK, but also gave us access to millions of fans, all of whom would be looking to pay by lay-by as we scale throughout the UK. And that is the strategy that we adopted.
I mean, that makes perfect sense. Now, you've also kind of been a victim, if you like, of some of in terms of the sector and share prices pulling back. What can shareholders look forward to in the coming months?
Look, Tim, as our family are the largest shareholders in our company, you can imagine that we certainly understand the pain of others, and I can say that wholeheartedly. I mean, we have overachieved on every single marker we set for ourselves, and that was set outside of us by the investor analyst community. We will stick to our strategy. We will continue to demonstrate that we over-deliver on our plan. And, I do worry about the daily share price, but I need to focus on ensuring we deliver on our numbers, continue to grow our business, and the market will make its own decisions about whether or not we are achieving against what we promise. And right now we are. And that's all I can do, is continue to drive this business to perform. And I'm wholeheartedly committed to doing that, as are our team.